Hey guys.
What?
Guys. Hey. Whoa.
What?
Hey. Hey. You
What?
hear me? Come on, put your earbuds in. Let's go.
No.
Oh, that's much better.
Yeah, slackers. All right.
Hey,
this is Darin. Yeah,
Tariff.
it is now. It is
Tariff.
Listen to me. Listen, Linda. Listen. Put your earbuds in. All right. Let's go ahead and get started here. It is Wednesday after the bell. And boy, what a Wednesday it was. We're talking about 3,000 swings. It's exactly what happened today. But we'll get into that a little bit later. I'm Darin, the resident ape. My fellow ape is down below me. His name is Josh Morgan, JPM. And off to the screen's right is the investment banker guy. Yeah, he's smiling big. Got a funny thing to tell you about Goldman and their wishy-washiness back and forth. And then we've got, of course, in the bottom right corner, Mr. Tinfoil Hat. We all probably wear those at some point or the other. You might also replace that with Doge because that kind of just cancels out tinfoil now. A lot of things are being proven as not tinfoil anymore. Like I like to say, you just turn that into a graduation hat now instead of a tinfoil hat because everything actually comes true. Anyway, that is Royce Wells. That is Royce Wells. He's the one that just wrote he wrote the book a while back, but it is now finished and available for purchase on Amazon. So how would they go about getting that, Royce?
It's easy. The title is Investing in Indicators, How to Make Money Every Day in the Stock Market.
There you go.
Go to Amazon, look for my name or look for Investing in Indicators. Can't help but find it. Literally, money printing press. Can't get better.
Royce Wells, Wells, and it's not Rolls Royce, it's Royce Wells. And I challenge you to say Rolls Royce Wells 10 times in a row quickly. Good luck with that. I can't even make it past 2. Anyway, so you can go get that book on Amazon, and basically you're going to learn all the secrets.
Yeah,
he's giving away secrets.
Quite literally.
Which you can make back in 1/10 of a trade or something. It's something crazy like that.
Your very first trade, just using the book, you should be profitable.
So it's Kindle, it's paperback, and it is a nice book for your table in your den. A good table book, the hard copy.
Yep. Conversation piece.
There you go. How many pages? 300 and something on the Kindle?
Yeah, about 337 pages on the Kindle.
All right. We didn't plan for this to be an ad, but it is something that we are proud of here. We are proud of our leader for putting it into. We hear it and we see it in the grass, but now it's available for everyone. So I don't feel as special anymore, Royce. Anybody can get that information.
Well, hey, you got the secret sauce in the information. They don't get all of it, but they got enough to get enough to be dangerous.
We've been holding out long enough. We can share it with the world.
That's right. Plus, I get the personal added additions, because you're here in the office with me. So, can't buy that. All right, let's move on. What a big day in the market.
Anyone else want to be in the office with this guy?
No way. You're supposed to bring up. You're supposed to bring up the fact that I said this is my prison. You forgot to do that. You said you're going to bring it up.
Change the locks. With you in here, you'll know.
A little padded prison. And if I don't win one of these weeks, at least I won't hurt myself when this old man falls. I get it. All right. So, all right, let's move on. That's enough of the intros. It was quite a historic day in the market. And we did the whole bobble up and down thing again. And then all of a sudden it went down, down, down. And then I thought, okay, that's the rest of the day. And then all of a sudden I look up and everything is going nuts. I mean, even Bitcoin's going nuts. Anything's nuts. I mean, your grandma's stock, everything is going up. And I researched it. And all of a sudden I saw it, and it was a pause. It was a pause on tariffs. So, the funny thing is, not for everybody but China. Haha. What's funny is, Daniel does these agendas, and so he had written it all up based off of what happened because he works, another day than us, and everything's pretty much changed. So we're using that as a base, but just the information is totally 100% the other way. So let's talk about that. Give us a recap now, or should I now, since I updated it for where we are now? Is that kind of
jump in there, Darin, because everything I wrote is like kind of irrelevant. So
I scrambled and I said, this is not going to be good. We're going, okay, what is it now? Because everything changed so much. So just the recap: NASDAQ is over 12%, S&P over 9.5%, Dow 7.8% up. You even brought up the fact that there were so many shorts in the QQQ, and I can only imagine the panic.
There was 1.5 billion into the triple short QQQ, which is the largest in 15 years. And I wrote that was news like a day or two ago. So obviously those are underwater now.
Underwater, that's an understatement.
Yeah, are they going to hold on to them?
Triple leverage on something that went the other way by what'd you write, 12%. So you can do the math. It's not exact, but it'd be 36% the wrong way for them.
Wow,
that's gotta hurt.
Yeah, you think
that's gonna leave a mark?
So what I think of is with the bigs, it's always programmed in. It's not like some dude getting all crazy and nuts and going, oh crap, what am I going to do? That's the retail guy. It's the investment houses. They have to do is okay, the algo will take care of it, is the way I assume that will happen. So if they had to flip those shorts, then that's probably what happened. And that may be why we went up so quick. I don't know. I don't know. I'm not a programmer. Royce is.
I say nothing.
And coder. That's right.
I already posted my gains for today. I'm happy.
Yeah, quite the gains. Yes, because he's playing it up and down, and that's the key here. You can make money both ways. I was almost going to say something dirty that way, but I won't. So indexes around the world, right?
Yes.
Talked about that they were all down, and so they stayed down. But now it'll be fun to see overnight going into Options Friday, what's going to happen in the rest of the world as a reaction to what happened today. So
it's a new quarter. Let's go.
That's right. It's a new quarter. Any comments there? I mean, it's just besides the craziness of it. I mean, before we move on to basically talking about Tariff Day and the results. Nothing. Cool. Yeah. Cool.
We like
moving right on. That's it. Yeah. We're smiling.
I mean, yeah, it's just kind of hard to wrap your head around.
It is. Our heads are spinning kind of. So the Liberation Day is what they call, or what Trump called, when he put these tariffs, reciprocal tariffs, into play. It finally did start last night, worldwide, and that didn't last too long. Because, and this is again, some people are calling Trump a genius. They're saying that this is all part of his art of the deal, master move.
We're
I guess
on a giant apprentice. That's where we are. A giant apprentice.
Mm-hmm. That's right. And he still wants to fire China, I guess, because he doesn't want it on the teams anymore.
He's working on it.
Yes. So the updates on that, the reciprocals were lowered to 10%. China was raised from 104 to 125% now, while everybody else gets a free pass now for 90 days. He still goes ahead and jacks up China another 21%. And then there was a mention I saw that over 75 countries had been like standing in line, like a line or a queue at Disney World, waiting to take the tariff trade ride with Trump. So it's like everybody lined up. They can't afford not to. They have to. I mean, we're the big guys, and China is too. But I mean, have they not gotten weaker, Royce? I mean,
not really. I will say this: China was very smart in their diversification. About, I want to say 5 or 6 years ago, a very large percent of their debt and their GDP basically was going through the United States. As of, I want to say January of this year, that's less than 11% now. So less than 11% of their economic commerce is based on the U.S. and the U.S. stock market. So they distributed and they diversified, and I think they'll come out smelling like a rose in the end.
Okay.
I don't think they're going to negotiate. I think they're going to literally just say, "Hey, okay, you can raise tariffs. We'll just go to other ports." There are ways around you.
It's the line in the sand, and it doesn't look like either one's going to budge.
So I'll not take the other side of Royce, but I slightly disagree because while the direct trade with America is down significantly over the last 5 years, the tariffs are on anything brought in from China. So let's say you're a Singapore company, and even if you bring in the Chinese goods to Singapore, and then you're a Singapore company selling to the US, you still have the same exact tariffs imposed. So no matter where the company sits, it's where the original product is sourced, made, or developed. And that's still, the US is still like 36% of the world's consumption in dollar terms. So it still has a huge impact on their economy. And whether this is true or not, I read that like China kind of has like 3 options when it comes to this. Could be more, who knows what they'll actually do, right? But it's that they kind of concede to Trump in defeat, which obviously I don't think they would just like roll over. The other option is they devalue the yuan to make it, so that like goods can be afforded, which obviously continues to hurt their economy because it's not doing the best. It's maybe on the come up, but the kind of stimulus hasn't been released that people want to see to have their stock market go up. And the other option is to unleash, $2 to $3 trillion worth of stimulus. But then that in turn also pushes their debt to an all-time high, which they've, slowly reeled in over time. Yeah. So I do think while they won't concede, they do have to do something. They can't do nothing because it will hurt them significantly.
There's a fourth option.
War?
By the way. Yeah, there's a fourth option. Yeah. Make cheaper goods. Make your goods cheaper. Don't make your goods as quality as they were. You spend less on them, so that way you still are profitable.
I don't know how much cheaper Chinese goods can get before it just comes falling apart. Like
that's what they excel at, right? They excel at making it cheaper. So, yeah.
Well, they excel at stealing the info from the U.S. and then making it cheaper. Yes, you forget that other part. All the spies here in the U.S. stealing our tech and everything else and taking it back to China and making everything.
What are you talking about? All you have to do is like literally buy one and then mass produce it. Literally take it apart, mass produce it. Make all the pieces, mass produce it.
I feel like that's what you did at Christmas, Royce. You took things apart to learn how they work.
Yeah, absolutely.
And they ended up giving you an erector set so that you would stop tearing up your toys.
Had to do something.
Learn how to do it. Yes. I mean, I did the same thing, by the way. So the other thing to add on is, I think I had looked. Yeah, here it is. China trade imbalance is now about $300 billion a year, and that's come down. So we'll have to see. And I guess maybe that's one of the things that he's trying to fix right now too. So now we can talk about the Trump's. You said Trump's angle here, Daniel. So meaning the art of the deal, I guess. What the execution of his art of the deal. Do you want to talk a little bit about that, or because this still does apply?
Yeah. So definitely big questions on kind of what the strategy behind all this is. And I'm not saying what I'm about to say is like my opinion, right? This is just kind of like what I read online of like why they might potentially be doing this. And it really all comes down to kind of like Trump doesn't really care about Wall Street this time around too much. Like I think I would actually argue today that he does more than he indicated before because he was willing to pause because of where bond yields went, kind of made him and Besant like squeal. But so, kind of the first angle is that he was dealt a bad hand by Biden. There was so much fiscal stimulus that happened, to be fair, starting with Trump during COVID, that it had to be unwound eventually. And so that we were going to have a recession in 2025, and it was better to just rip off the Band-Aid so that things recover by midterms instead of letting it roll, kind of longer and, maybe deeper, who knows, into that cycle where they would clearly not get, more Republican seats because, it's the economy's stupid, right? So the other angle is that a recession would bring down 10-year yields, which Besson has continued to harp that, this is like the important metric on which to judge Trump, and that bringing down yields will bring down inflation. It'll also help to refinance America's debt, and it kind of would, regardless of what Jerome Powell does, when treasuries go to auction, the market rate is what people are willing to pay. And so it'd be a lot easier to, refinance their debt. The other option or, kind of angle of this is that globalization needs to be unwound, which I think we'd all, maybe the US needs more infrastructure of itself, but you don't undo a 45-year, global economy in one day with a bunch of tariffs. But it's kind of a geopolitical thing to, make other countries more friendly to the US and for us to get off of China. The two important things that need to happen for any of this to kind of be true is that the US institution and retail, for that matter, would still need to buy US bonds, because foreign dollars, which maybe we've talked about before, over the last 5 years are just not flowing into US treasuries like they used to, especially if you look at China and Japan. And then also Doge has to work with government cuts. So, and I'm, like I said before, not saying I agree with all these angles, but that is like just for the listener's perspective of why Trump might be doing this, like why, I know it seems crazy, but you do have some pretty smart people in there, and I'd like to think they know what they're doing. But obviously there was a big basis trade that was kind of getting upset. And instead of yields coming down in the last 3 days, they went up, I think, about 50 bips. So we were just under 4% on the 10-year. It was at like 3.8 or 3.9, and it went up to like 4.5. And I don't know what it is right now, but it was down to like 4.3. So obviously in the immediate term, these tariffs had the complete inverse effect in which they wanted it to have.
That was a lot.
Yeah.
I do know that speaking of the Fed, they had their minutes released today. And then tomorrow there'll be jawboning going on after the release of the minutes, like there is every single time, to either talk it up or talk it down, whatever. But I'm looking here through, because I didn't get a chance to actually watch that part of the release of the minutes. But I mean, I was looking at some headlines. Fed minutes shows some officials favored steady balance sheet drawdown. Another one, Fed minutes flag worry over more persistent inflation. Let's see. Here's another one. Fed minutes reveal growing inflation concerns and cautious stance. I mean, I want to throw up when I read these. The next one is Fed minutes show worries over stagflation boogeyman ahead of Trump's tariffs. So stagflation is something I keep hearing, though. I mean, over and over again. And even some of the things that you just said, that kind of points that way towards stagflation. And you and I had a deep dive, Daniel, about stagflation, and that's the worst of the two. Recession and stagflation, because stagflation, you can call it stick around inflation, because that's kind of what it does, and it takes a lot longer to get out of it. So any ideas there, Josh, since we haven't heard much from you, because I haven't really even turned the show over to you, so I feel guilty.
No, I mean, there's a lot. I honestly think like today's market reaction kind of hits on a lot of the points that you guys were just making. Like, to Daniel's point, what has transpired so far is just chaos and uncertainty. And when you do that, to Daniel's point, like, that drives everybody into a safety net. I mean, you look at what like Buffett was doing, and he's been, hoarding T-bills. And then I think there's been like another, 5 or 6 trillion that has followed him into these T-bills. So it does help with, our debt and what we're paying in interest, and especially if they're, these high yield bonds and everything. And then it also kind of answered the question, like, what in the hell does Trump actually want out of this? And that's the big issue, that nobody's really had an idea, because everything's been so behind closed doors, and they're saying, yes, everybody's clamoring to come kiss the ring, and whatever you need, Mr. Trump, like, we're here, Mr. Trump, just please tell us what you want us to do, and that kind of thing. And I think him going from like last week, where it was, I'm doing tariffs regardless, to now it's like, okay, well, I had enough people come to the table, give me what I want. Now we know that it's kind of back to where we thought it was a month or two ago, when this is really just a giant negotiating tactic. Because if you go back to like last week, or, if you look at our agenda from last week, everybody's like, we don't even know where he's going with this. Like, what does he want? What can we offer him? Like, how do we make this right? Or how could, nobody knows. Now we kind of realize that, okay, this is actually a negotiating tactic, and he's just not going full steam ahead with tariffs, trying to drive, all of this business into America. I mean, that's part of it, but it's not the whole plan, like, where he's not trying to everything come back to America and get manufacturing and things like that, because that doesn't realistically make sense. Like, there are some things that these other countries can do faster, cheaper, and more efficient than we can. And it's just the fact, because we've been doing it for so many years, and we've had these trade agreements, and everything has been working out great. And that's why we have, inexpensive things that come from like India, China, Vietnam. And, they have their tariffs that are helping to at least keep their economy stable, while we import everything that we do from them. But, like I said, I think the reaction today was so great, because we're kind of starting to, I guess, pierce the veil a little bit. You're getting those, you're starting to kind of peel back the layers of the onion and really figure out, okay, this is actually what he wants to do. And when you get that, you remove a lot of the uncertainty. And so everybody's kind of like, oh, here we are. Okay, that's why, yes, it's time to buy. But then, that's kind of my interpretation. Again, we've had not more than 2 or 3 hours to really digest what in the world has happened today. So, I mean, that's just kind of my interpretation of things based on reading the tea leaves, but that's kind of how I see things going.
Yeah. Uncertainty is certainly something that he uses as a tool. He also, I think one of the things that he is trying to accomplish here is the world against China. And it's like, if you're not going to feel the same way we do about China, then we're going to make you feel that way. Because if you get anything from China to try to sell to us, as Daniel mentioned earlier, then you're going to get tariffed too. So it's kind of these are the two big superpowers, and I want it to be 1 versus 1 instead of 30 countries versus 200, whatever it might be. He wants it to be 1 versus 1, and I guess that's what part of the art of the deal is. I haven't read the book, but it seems like that's what he's trying to do.
I read the book.
Yeah, good. Very good. Nice.
This was like 8 years ago, though, 9 years ago. So I don't really remember it too well.
How many deals did you make since then?
A few. Not as good as DJT.
Yeah. Citibank, by the way, I think I missed this last. Citibank said that be careful that this pause will not prevent inflation. This again lends towards stagflation, and it'll hurt growth, which again lends towards stagflation. And then your buddies at Goldman said that there will be no recession now all of a sudden. And one day we go from, there's definitely a 45 to 50% chance of recession to now there's going to be none because of this 3-month pause. So
just wait till next week, Darin.
They're just trying to talk. I think we all feel like things are piped into the algorithms from the media. So all they got to do is say stuff, and it works its way to the algorithms. Anyway, anyway, it's possible. The technology is there. Sound like $6 million man.
The only thing I think that a lot of people are missing is the pink elephant in the room. as far as, everyone coming to kiss the royal ring, right? It was like, hey, kiss the ring, kiss the ring. This 90-day pause is giving him enough time to meet with each one of these countries'
That's
leaders.
Exactly right. Yep.
To basically negotiate, and it's like, hey, you want more business in your ports, you want more people in your country, you want more goods going through your country. We'll put the rate at this rate if you're willing to come to the table and give us something as well. So basically, we've had forever trade routes across the globe. Basically, what he's doing is shaking up the trade routes to basically say, okay, hey, we need more money over here, or we need more goods over here. And if we can get the goods over here, that means we can manufacture it over here cheaper than over there. So basically, it's a giant game of risk. And we've all played Risk, maybe we've all played.
Oh yeah, just roll sixes. That's all you need.
And basically, he's really good at playing this and basically intimidating and basically and scare them completely witless, so that way they all line up and they all want to basically have him on their team.
Well, yeah, but that was also a big reason why last week and the week before, why there was such a strong market reaction, is because everybody, you turn on any channel, like any of the talking heads, they're all kind of saying the same thing. Like, if this is a negotiation tactic, how in the world, in what was it, between the Liberation Day or whatever and the second, there were like 4 days in between. How is he going to meet with every single one of these world leaders and tell them what he expects in return? Like, where's the negotiation time? And so everybody's like, yeah. So then you inject that little bit of uncertainty. Like, is he actually doing this as a negotiation tactic, or is he literally so hell bent on tariffs that he's just got tunnel vision and he's gonna get it done? And so that's, again, kind of why the reaction today was so strong, was because everybody realized, okay, he's not a raving lunatic. Like, he's actually going, like, he's taken a pivot, if you want to call it that, use a Fed word.
Absolutely.
And so now everybody's like, okay, he actually is trying to negotiate all of this. Now he's got time. We might see a little bit more of a smooth thing. The flip side is he still is who he is. The flip side is he still is who he is. Like, I mean, the odds of him not tweeting something on a golf course about China and stirring the market on a random Tuesday morning is still pretty high.
And I think every single one of us would be crazy to think that he did not also make money on this rally.
Yeah. Did you not see all of the open SPX calls that were like the 0-day calls that were open this morning?
Yeah. Right.
Mm-hmm. Shortly before the announcement was made.
At the very least, his cronies making money for sure.
Remember, he's only taking all the deep state salary. So that means everything that he does while he's in office is to make sure that he and his companies make money.
Mm-hmm. Yep.
Well, I mean, he read The Art of the of Trading by Nancy Pelosi. That's why. So we'll move on. Seriously, we're going to move on. So the reason I just want to comment on a couple of things. You said it sounds like all the media is saying the same thing. Hello. We all know there's a script out there for everybody to read. We've even seen the videos of them all matched up, and every news station says the same thing. Number two, what you were describing, I think once everybody feels like they know what Trump's doing, which I say that may be what he wants you to think, and then he'll, like you said, maybe hit a shot to the sand bunker, and then he changes everything else. That's what happened today was a relief rally. They love to say relief rally. It's like, oh, whew, at least now we know what's going on.
And I call it dead cat bounce.
Yeah, that's what I call it. We've had a few of those. And then to sum it all up, what I thought about was kiss the ring or kiss my ass. That's kind of the way to sum up maybe what the art of the deal is. So I get credit for that if anybody uses that. All right, so let's
definitely not using that one.
Yeah, you're gonna ask me to kiss your ring.
Yeah.
All right, so moving on. You talked about nobody wants the U.S. debt, Daniel. What do you mean by that?
Yeah, so this is kind of, I guess I skipped ahead referring to the China and Japan over the last 5 years have significantly trimmed their U.S. debt holding, right? So before, countries used to buy U.S. debt as, kind of one, just like in good favor to their trading partners, but also, when you deal with the world reserve currency, you want to have your money somewhere, you want yield, you buy U.S. debt, because for a long time, until I believe it was under the Obama administration, we're like the only country that had a AAA rating. Now we only have AA. But
thank you, debt.
As sorry,
I said thank you, debt. Go ahead.
Yeah.
National debt. Yeah, go ahead.
Yeah. Right. So as countries, want to diversify away from, the U.S., whether it's the dollar or holding their debt, they also diversify away from the treasuries, which also means that they're not using our dollars as much. And so, I think for a while, at least the last year, we've talked about how, China and Russia want to have their own currency, and the BRICS nations want to have their own currency. But, with this tariff kind of thing going on, I think it just kind of rears its head again with China, having less debt, of where the U.S. might be going as, maybe not the world's superpower anymore, and kind of sharing that with some other countries. And, I thought one of the interesting things is that, I'm sure, you guys saw this with the basis trade, is that there was a lot of speculation of if China was dumping treasuries in the market, which there's no way to prove exactly who is dumping these. But the only thing, I guess kind of saving grace, is that the dollar didn't drop like crazy. So it's like, okay, China's retaliation against the tariff wasn't dropping like trillions of dollars of U.S. debt into the market with no bid, which God, you want to talk about something that would have raised yields like crazy. So thank you, China, for not totally screwing us yet. Anyway, keep the tariffs coming as far as I'm concerned.
So I think one of the things that Trump did not like is the globalization and how we have kind of turned it around now to go against the globalization thing that the WEF was having parties about every year. And we're kind of going against that, because there was a lot of things that were being done in the globalization efforts that were even going against our culture and everything else. So, I mean, it was like, let's turn this into a world government, which biblical people will say, yeah, that's what it says. But in a world currency, it's like everybody, it was like we were moving our way towards World Health Organization, world this, world that. And a lot of it was being born by all these corporate execs that meet in Davos. And what's funny
I knew that word was coming up.
You knew it was.
I was like, and 5, 4.
I'm so predictable. But what's funny though is now that it looks like we're fighting against that, Klaus Schwab, Mr. World Economic Forum himself, has stepped down. Oh, let's pause for 5 seconds. Okay, there we go. So anyway, my point is, I think one of the things also, it's not said as much, is that Trump is also trying to get rid of even more so the globalization, and just kind of put that to bed and make a reset of it. I could be wrong. That's just a opinion, like anything else.
Opinion,
That's right.
A little grape ape.
Everyone has an opinion. Everyone has a never mind
opinion.
Some people call it a conspiracy theory. Other people call it an opinion.
Have you read the 2030 agenda? Never mind. I'm not going to go down that again.
Oh,
all right, Nostradamus.
I just will say DEI was part of that, and we know how it's anyway.
No one's talking about that anymore.
So let's they don't want you to. Let's talk about it's not in the script anymore. So let's look at earnings looking bad. So I have heard that, and if you listen to CNBC, that's what the big scare is coming up, is that everybody had to adjust their earnings, because now the earnings is not going to be as high as what they said in their forward guidance last time. But we all know that the Wall Street analysts have their adjusted earnings. And even let's say that the corporate forward guidance was a 10% gain, as long as the Wall Street analysts come in and go, well, we think it'll be 2%, even that, and then they get a 3%, the markets go crazy, because even though it was way below their forward guidance from the company. This is a game that I hate. The analysts come in and say it was 2%, and we got over that little low bar now that was out there. So, give us some more about what you wanted to say there, Daniel, about the earnings, because that is a big issue.
So the analysts are seeing that earnings growth for this earnings period will be about 6.7%, which is down 11% from November when Trump was elected, which is pretty substantial, right? Especially coming out of like the holiday season, for depending on the company, is down significantly. And which, to be fair, I don't think you can directly attribute towards Trump, because these things move in like long periods. But it doesn't reflect well on him by any means. And we see profits rising about 9.4%, where at the beginning of the year, they were at 12.5%. And obviously all these numbers are kind of any potential pre-tariff stuff. And, who knows, this might be completely irrelevant now with markets how the next preceding weeks go. But I think, we'll have a lot of interesting commentary, especially I think the banks report earnings first, of where, people see things going, right? If we are in for a kind of what I guess I would call a regardless recession, of like, there's a recession coming regardless of any tariff news or anything like that. And then there's, we'll call it expedited recession, where tariffs don't move, and we start the recession sooner rather than later. And I'll just point back to the last episode we did, is remember, this is perfect timing for when the 10-year minus the 2-year reverted. We're right at that sweet spot of where the recession starts. So, it's all timing well, as Darin might like to say.
Yeah, it's all scripted well. But the other thing I was going to say is that the timing of what Trump's doing and pulling back also, I agree with what Royce said as far as you have a queue, you need to talk to everybody, he is doing this right before the earnings release. And it's just before it too. He wasn't going to let it go any further into the earnings with that uncertainty. And the other thing is these banks, there's a lot of scare out there on these banks right now. And that's why they had fallen so far. What are they going to do? They went down, and now they're anyway.
I mean, talk about earnings, like you're talking about the earnings. Like one thing that's going to be interesting to me is like these earning reports that are coming out, is the markets hang so much on forward guidance, especially lately. Yes. I think you couple the muted earnings with some of the really muted forward guidance, because how do you give forward guidance if you have no idea what stable looks like anymore? So you're constantly going to be looking at what is the downside here. So you can't really like adapt and overcome or branch out or try anything new or innovative or anything like that, because you're constantly focused on, okay, what happens if this goes wrong? So you don't see the grass is always greener kind of thing. You don't see the other side of it. You're just focused on, how do I not screw this up? So forward guidance is really going to be difficult to predict. And that's one thing that the markets really hang on every word when it comes to these earnings reports and these earnings calls. So again, same thing we said back in November, December, when we were predicting what's going to happen in 2025. And pretty much all of us said the same thing. It's going to be volatility. And I think that's just more on that.
Here's another thing they do, and you were touching on it, is they give no guidance, and that's their wimpy way out. They don't want to set a bar, and so there's been several big companies do that here lately. Apple did it at one time, didn't they? They gave no forward guidance just so that there's nothing to play with. And so having no guidance and then whatever you come out with, whether it be low or high, is better than having a guidance and then going underneath it. And so I think that's just like Netflix and their subscriptions. Well, we've hit all these subscriptions now. I don't want to make that part of what you judge us on, because we're not going to have any. In fact, we'll probably have less subscribers. I mean, it's what these companies do so that they can look better than where they actually are. So it'll be fun to see, like you said, what's it going to be like on this forward guidance. I think I would love to see a chart.
Oh, I didn't say it was going to be fun. I just said it was going to be interesting.
No, I know. Well, I call it popcorn. Watch and see what happens. But I think it'll be fun to see. Fun, if that's your thing. What past companies gave guidance all the way up till now, and then which ones give no guidance. And I think if you had any type of analyzation, you would say, wait a minute, no guidance. That must mean they were scared to give guidance. So that means there's something going on. But unfortunately, that's not the way it works in algo world. It's just going to go where it's going to go. Anything else you guys want to throw on that before we move on from earnings? We're at 5:12. Wow. Okay. Let's move on. So because of what's happening with the stagflation, et cetera, Daniel's next thing was about rate cuts, which we can touch quickly on. It keeps changing. The FOMC minutes actually did touch on that and what people were thinking, and that's where the whole So we kind of already touched it, but that's where the FOMC minutes said, hey, this is looking like stagflation, and therefore, and inflation's still there, so we will not cut. So I heard at 1.6, but didn't we talk about this like a few episodes ago that they're predicting 6 cuts or whatever it was, down to 4, and now it could be 2 again. So it's, in other words,
it's back to 2.
Yeah. So in other words, just screw any reports from now on. Just wait till it happens.
Just do business as usual.
I mean, whether it be unemployment, any of these reports that come out, it's all a narrative, and it's nothing is real anymore. We live in the.
Well, see, the interesting thing is, you were talking about like adding new jobs and unemployment climb just like a fraction. The one thing that I find interesting is that none of these Doge cuts have been included in the unemployment reports yet.
Exactly.
Yeah, because I think they're all.
They're still being litigated.
Well, no, but they got severance, right? So until your severance is up, you don't file for unemployment. Otherwise, you don't get your severance. So let's say they get it for 3, 6, 9 months, whatever. Until that period is over, then it's not reported as unemployment.
Yeah, but it's still going to play with the job postings and job seeking numbers.
Yeah.
No, for sure. I'm just saying specific to the numbers that they look at. It's you don't see that spike yet because it's not reported on paper yet, even though we all know it's coming.
It's coming. Yep. Watching the train wreck.
All right.
I looked at the news last night and I was like, who needs a movie when I could just read the news about where tariffs are going? I was like, it's almost so ridiculous at this point. It's entertaining.
Oh yeah, that's why I say popcorn. It's popcorn moments.
Yeah.
I
won't say Gazira, but yeah.
Explain yourself. What'd you say?
Nope.
To those of us that don't have the vast knowledge, please.
If you know, you know. If you don't, then I'm not repeating it.
All right. By the way, just say hi to the guy that just walked behind Daniel. Hi. Anyway, moving on. It's time for After the Bell Crayons and Charts with Royce Wells. What are we looking at today, Royce?
Oh, let's go take a look at some really, really spicy good stuff.
Spicy, you like that?
Yeah.
I can't handle that.
Let's see.
Hurts
I'm not gonna do it. I'm gonna actually look. I like picking on real estate way too much. I like picking on real estate.
You like that read. You do.
I do. So this is, I'm gonna go to the left-hand side first. And we see our dollar sign letting us know that this is the end of the fall that basically started a few weeks ago. So it started March 21st. where REIT basically went from 26.82 all the way down to 22.62. That was quite a haircut. And if you weren't ready for it, yeah, you probably got whatever handed to you, and it wasn't a good feeling or a good experience. But we do expect that basically things are going to pick up just a little bit. We see the short-term trend basically pulling back into probability on our Z-Pro down here. The only thing I'm worried about is that little bitty pink guy down there at the very bottom. Basically, this pull-up today pulled the long-term back out of the orange. Last time it was in the orange, by the way, folks, was May of 2024, and then prior to that was December of 2023. So it doesn't go into the orange often. And is this a relief rally? Is this a dead cat bounce? Well, it's easy to tell. We're not going to speculate. We're just going to use the bands and find out. From this view, we see that basically, once again, the weekly said, yeah, we're heading down. I'm going to bring this up to the weekly time frame to see what we see. And a lot of people have been calling for basically a major correction or a major recession, right? And on this guy, I'm going to actually turn off, I'm going to go to Atlas, turn off all these extra recycling symbols because we're on the weekly. We don't need the warning. And basically what I want you guys to take note of, if you have not taken note of, is the fact that, one, the pink line for our apocalypse band. So like on the daily time frame where we had our 2008 crash, basically we were using the apocalypse band and everything went to hell in a handbasket when the compass line went under the pink line. Well, on the weekly time frame, there's about a 500 or a 25% correction from where we are just to touch that line. It pulled itself up about 5 to 6% today. The question is, will it do it long term? I am expecting a bounce from here, but I don't think it's going to be sustained. And here's why. I'm going to tap in and basically show you the beginning of the end. So in 2008, we had this same thing happen where the fast RSI line in our band went under the slow RSI line, very close to the deflection zone. And basically that means it has no support. As long as the fast RSI is underneath the pink, that means these candles will not be held up by this trend. And if they won't be held, like previously, notice the blue line or the cyan colored line was above the pink. We got to it. It acted as support. The fact that this guy is now underneath, if we go back and test this line, if we go back to that 2146 area, anywhere between now and July, we're just going to fall straight through. There's no support. And unfortunately, that means if there's no support here, the next supporting line is that center red line, and that center red line is sitting at 1583. Also, something to make note of, a lot of the commercial real estate leases are coming due at the end of 2025, going into 2026. And with so many people working from home, there is going to be definitely a surplus of commercial real estate that could be available for purchase without a lot of demand for it. So this ETF, this trust, this symbol, this equity, it's in for a very, very bumpy ride for the next 6 to 12 months. So be careful if you're trying to do anything with real estate in that time frame. Thanks, guys.
All right, that's Royce Wells and Crayons and Charts. You know, when you were doing that and you gave the time frame and looking at the chart, it's like, you know what? That could actually all happen in June, which I've been saying over and over again. It's June. So let's just see what happens. Let's just see if it bounces on down past that point.
When everyone else is on vacation, watch it fall into
June, July. I mean, I'm starting to get later in June, but I'm telling you, I've been based on the Fred reports I've seen. I'm all right. I could be totally wrong and look like a monkey, like I already do. But I mean, I'm saying June.
How many pips have you got?
Yeah.
Darin, I need to see some.
Wait a minute. I can throw that back at him. If he wasn't my boss, I would ask him the same thing.
I have the chart. I have nothing to prove.
That's right. I don't either. All right. Kiss my ring. All right. Or kiss my. Never mind. Right. So let's go ahead and go to that. That's a good transition there. Thanks, Royce. It's a transition I don't want to make right now. But here's the scoreboard. You will see that our victorious winner is my fellow ape, but he's just getting annoying. You know how you have that person that's in your family, that person in your family that you don't want to come to Thanksgiving, and they're starting to get annoying. Well, that's Josh now, because he's now got 4 wins, and I'm contributing absolutely nothing. Daniel has 3, so we're ahead. When I say we, I might as well just go ahead and say
you're
Josh
riding his coattails.
I'm riding him hard. I'm riding his tail. Not coattail, but just tail, since he's an ape. I'm just riding his tail. And Daniel is 3. So what do you have for us, or do you have something yet there?
Yeah. BAH, Booz Allen
BAH.
Hamilton.
BAH.
You got a law firm? What is this?
Oh, you
It's
mean
a
the consulting
firm?
company that has 95% of their revenue coming from government contracts?
Yeah.
I mean, like those guys that actually that's part of Doge, as they went in and said all these, first of all these accounting guys are a big piece of, you know what, which I've always thought. But yeah, go ahead.
To Daniel's point, though, that's why it stuck out to me, was because, yes, I mean, they've got all of those government contracts, and that's, you know, a lot of like Deloitte's getting hit hard from a lot of these cutbacks. And then you look at every single stock today jumped 15 to 20%. They bumped, I think, 1.5%. Yeah, 1.3%. And that just kind of stuck out to me. Plus, they seem to be stuck in this channel. So should be a pretty interesting one to pick for next week.
Yeah.
Well, if your first name's Booze, I mean, I don't know what you expect, but let's go to, we need a chart. We need a channel.
Shots.
Yeah, exactly. That's Friday. So what is...
Sorry. All right.
I'm not waiting that long.
Looks like we have a range on this guy from about 115 to about 100. So, yeah. Enjoy that range.
That's 420. Wait, what is it per 450?
It's like 4.25.
4.25. Let's just round it to 4. Everybody go at 4. Okay. So let's go to 116. Yep. Okay. 100 to 116. Let's go. Pick your poison.
By the way, I got to add to that. If your first name is Booze and your ticker symbol is BA, I don't know what you expect, but go ahead there. All right, so they're having a very booze and buy time right now with their stock. So go ahead. What you got there, Mr. Picker? You got your channel.
I still see relatively lateral. So
right in the middle of that right now, almost exactly 108.
Yeah.
Feeling like
maybe just so wait, so we said 4, we went 4 exactly. So 1 to 116.
Yeah, so you got 104 to 108, and then on the flip side of where it is right now, 108 to 112.
No, I want to go 104 to 108.
Okay. Excellent. Okay. And then pick your next poison. Who follows you, sir? Are you letting?
I don't know, man. It's a coin toss between you and Darin, because neither one of you are on the board. So
yes.
but if you go back to including last year, it's been a long time.
Yeah, it's been.
I do. I mean,
real dry spell, huh?
Long time.
I do have to give Darin the pity pick.
There we go. I get the pity pick every week. Plus, you said that eventually we're just going to go to whoever has one. I feel like we should take the middle here. I feel like the macro is
do that.
I feel like the macro though is what's at play here, because it could be a tweet on Wednesday all of a sudden, because that's what's happened the last couple of weeks with this Celsius. I want to take
this one.
Go ahead.
I would just say this one hasn't really reacted as much with the market, especially if you look over the past month. It's literally in this like consolidation channel.
Ooh, when's their earnings? It says right at the corner there.
Not for a while.
It says next earnings report. Okay.
June 3rd.
Yeah. So they'll probably try to keep it up until that earnings report hits, which is when they lost all that the contracts. So I'm going to go below.
So you're going to go 104 to 100?
0. Yes, 104 to 0.
Okay.
big range.
That's right, baby. I got big ranges, and I cannot lie. All right, who's next? I guess it's Royce. That.
Well, yeah.
Daniel gets last every week.
Daniel keeps winning, so I'm gonna go Royce.
Right, dang.
Whoa! Hey, game knows game, you know.
Yeah, game can't recognize his game.
I mean, I know it doesn't mean I have to play it.
So, I am going 112 to 116.
Oh, 112 and up.
112 and up.
To
forcing Daniel to win again. Forcing him, whether he wants to or not.
Thanks, because that is the range I wanted.
What's easy to say now? All right.
Well, I let's see. I wanted like originally like 105 to 110, but
yeah,
then we changed the number, so this is close enough.
So I got
all right. We'll see what happens. Who will be the next one?
Now that's a team
forever to win. It's me versus Royce. The Memphis crew.
I'm literally every time I get the opportunity giving him the channel that I would take.
Yep. Which makes us feel better, Josh, because that means it's closer to where we are than the other way. So.
Yes. I like how he jumps in and he's like, "Oh, I'm actually technically winning. I'm just winning for Daniel."
Hey,
he wins.
There's no I in team. There is no I in team.
There is an I in win, though.
Yep.
Right.
Yep. All right, guys. Hey, we've gone almost an hour. Wow, we're not supposed to do this. I knew that wasn't going to happen
absolutely
anyway. But a lot has happened. A lot has happened in the markets, and like we say, in this Trump era, every week should have. And we did 2 weeks basically of news. This era we should have plenty to do every week. So appreciate you bringing all the facts and figures there, Daniel, getting us with all the basically the format and then all the excellent information that both Josh and Royce brought for color, if you will. And I will see you guys next week.
You heard that? He doesn't bring anything to the table. You heard that, right?
Okay, Royce, I'm going to teach you to read the notes that I have next. Never mind.
Come on, Darin herds the cats that are us.
If you remember, we had to change everything because of Trump. We had to change all the first part. I know you're kidding. All right, we will see you guys next week. Who knows what will be happening, but we'll be here for it. See you guys.
Sounds good. All right. Appreciate you guys.